What's up, YouTube? Today I'm going to show you guys how to. Well, it's not how to. I'm going to show you guys the strategy that I use that's helped me win a bunch of trades. And yeah. So, first thing is you need to understand and break it down. So, first thing, you look for key levels. Key levels are your 4 hour and 1 hour session highs and lows. 4 hour, 1 hour highs and lows, and then session highs and lows. So, fuck, I haven't done this in a while. I know. I haven't been that consistent with YouTube. So you look for 4 hour or 1 hour session, 4 hour, 1 hour highs and lows, or session highs and lows, or you can do them at the same time. And then once one of those key levels get hit, so let's say a 4 hour low or high got hit, then so second thing is just wait for a key level to get hit. So my strategy, you don't need to know what daily bias is, because what I believe is that daily bias always changes, and I'm always right about that, and it will always change. So you don't need daily bias. So let's say you were bullish in the morning, and then you took a trade at like 9:30 and it turned bearish. Yeah. So you see what I mean? Daily bias will always change, so it won't really matter. All that matters is your confluences, like session highs and lows, or 4 hour and 1 hour highs and lows, SMT, fair value gaps, I fair value gaps, 79% Fibonacci retracement, equilibrium. So now, once you have waited for a key level to get hit, you scale down, scale to lower time frame, like the 5 minute, and now you look for an inverse gap. So you look for a 5 minute inverse gap, SMT, or what's it called? 79% Fibonacci retracement, right? And then, so this is your, fuck, I don't use TradingView, so I'll just get a bunch of ads. I'm not paying for that shit. So after you get those confluences, then you look for a regular fair value gap to get respected. Or wait, we already said SMT, so you don't need to find SMT. Will just help you out. So either a fair value gap, 79% Fibonacci retracement, or equilibrium to get hit. So 5 minutes fair value gap, 79% Fibonacci, or equilibrium. So the reason I say this is because for the fourth step, when you look for a 5 minute inverse fair value gap or SMT, that will be your confirmation confluence. The fourth step is your confirmation confluence. Fifth step is your continuation confluence, right? And once these confluences have been hit, then you can scale down to the 1 minute. Scale to lower time frame, 1 minute. And then on the 1 minute, you look for a inverse fair value gap. So 1 minute inverse fair value gap. And before, it would be breaker blocks, order blocks, all that shit, but you really don't need that. So what you're gonna look for is inverse fair value gaps, breakup structure, so BOS. So breaker blocks and order blocks aren't really that important anymore because you rarely see them with the type of market we're having. Breaker structure is totally fine, so that would be my go-to. So either an inverse fair value gap breaker structure or 79% Fibonacci retracement, or a 1 minute SMT. Actually, no, I tweaked out. Not 1 minute SMT. SMTs are good to find on either on a 5 minute or a higher time frame, but not a 1 minute. I mean, you could still find SMTs on a 1 minute, but they wouldn't be as accurate. You know what I mean? So once these confluences hit, this is also your continuation confluence. Once your seventh step has been hit, you execute trade, and then ninth step would be to get out of the trade. So let's just say hit TP, and your TP would be set at previous highs or lows depending on what direction you bought in. So this is the full strategy. I'm gonna just leave it up here, take a picture, anything, screenshot. Now let's see if we can find it anywhere in charts. I can show you guys an example, because I don't know, market has been kind of shit, but all right. So before I started this video, I already so I don't make it like a long ass video, I already marked out this 4-hour low right here. This was the best one I could find because we already hit it on. So if I move over here, so long, we already hit this key level. What did we do? We swept liquidity. On the 4-hour, we swept liquidity on here. It just looks like it just formed below it, but on the 4-hour, we swept liquidity at this low. Now we're on the 5 minute, right? I'm gonna mark this area out so I don't lose it. So we swept liquidity. Now we look for an inverse gap, right? And if we look back here, we have a bunch of these gaps. So for a confirmation confluence, you can either find it on a 5 minute or a 15 minute. When you have a bunch of gaps like this, usually that just means it's one big ass candle on the 15 minute or on a higher time frame. So let's just say this is a 15 minute fair value gap, a bearish fair value gap, and we disrespected it. You see, we had a lot of resistance off of this gap. Didn't work out. What did we do? We disrespected it. We went up a little bit more. Then we had a retracement. Now we're on the continuation confluence. Actually, no, tweak this is smaller for value gap. We had a continuation confluence, which was a regular fair value gap that got respected. So then you would scale down to the 1 minute, look for an inverse, you get the gist. And then you would try to take TP at previous highs. These are really bad examples, I know, I'm sorry, but like the market has really been kind of shit, so I can't really get you a good example. I haven't been trading that much either, so. But the most important confluences you would be looking for are, holy voice crack, fuck. The most important confluences you would be looking for are SMTs. SMTs are really, really powerful. Like 75% of the time, you can always be right if you find an SMT. So let's say there was a bullish SMT at the lows. And by the way, if you didn't watch the SMT video, I recommend you to go watch it. I tried explaining it in the most easiest way possible. If you learn SMT, you basically don't really need any other confluences. So, yeah. Let's say you had an SMT at the lows. You see this push up. We inverse the gap. And then right after we inverse the gap on the 5 minute, we inverse another gap on the 1 minute. You would enter like probably this candle and, say your TP at these previous highs right here. So for your TP, you would always go on the higher time frame to look for highs, but this would be perfect, or up here, but I don't think we reached up there. Yeah, unless you held. No, actually we didn't. Yeah, this is pretty much the strategy. It's a great strategy. It works literally perfect for me. I don't know. A lot of people like to use many different strategies from a bunch of other YouTubers. But yeah, I just wanted to show you guys what my strategy is, and it's possibly like the easiest strategy you guys can ever learn. Only if you learn like all the other confluences, you can put this together. Once you put it together, you'll start to be winning trades. So yeah, hopefully you guys learned something from this. I do wanna start posting like trade recaps soon of with the trades that I took using this strategy, so I can show you guys that it actually works. But yeah, hopefully you guys learned something important from this video, and hope you guys enjoyed. And yeah.